Bruce, welcome back to F.A.C.E. How are you, buddy?
Oh my gosh, so good to be here. Thank you so much.
Nice to have you. You know, the rotation's getting a little longer and longer. So if you want to take over the screen, someone has to stop sharing and then you could take it over. How have you been, buddy?
I've been pretty good. Yeah, I've just been sort of like staying close to home, looking at charts.
Yeah.
So waiting for this. I've just been waiting for the opportunity to hang out with you guys.
Oh man, I'm blushing. Well, I think we have I think we're the beginnings of a beautiful bromance. I
don't even think it's the beginnings. I don't even think it's the beginning.
I'm already mailing my ID bracelet to you, Bruce. So I like you, but I love your work. Okay.
Well, I've been sitting here listening to Blake and everyone, and I have to say that I'm going to try to continue on with the theme that you all are talking about, but I'm going to take it from a completely maybe different perspective. Hopefully, attendees, you people will enjoy sort of a different view of what's going on. A little bit of a discussion about the stock market right at the beginning.
Okay, so we need you to see your screen.
Okay, so I'm still seeing a screen.
Yeah, Blake needs to stop sharing. Let's see.
I don't think I want to stop sharing. I'm just
Blake likes to share.
Oh, be a giver.
No. I think I'm just going to keep it here. Sorry, guys. No, just kidding. All right. Sorry, it's my fault.
Thanks,
you guys have a great interview.
All right.
And thanks for joining us, by the way, Bruce. Appreciate it.
Yeah,
thanks, Blake.
Bruce is top shelf.
Okay, here we go. Let's see what we get here.
Drum roll.
See that?
Coming up. Yeah.
Okay, beautiful. Okay, all right. So just to start, first of all, thank you, Dale, for having me. It's always just a real pleasure to be here. And in continuing to talk about inflation trends, I hope though that the perspective that we talk about, this is going to be kind of a white coffee and case study, is maybe a little different perspective, and it's going to be very long-term in its orientation, but let's just have a look here. First of all, I just want to say that there's some great free content out there. I blog at stockcharts.com, and all of my blogs are not behind a paywall. You're welcome to them. I've got them back to like 2015 or something. And so just go check it out. And you can also just go to the stockcharts.com, go to articles. I also do a lot of videos for them, and the show I have is power charting, and those are also available to anybody.
Oh, you're on with David Keller?
I'm going to be on with him today, actually.
Yeah. Okay.
So I get to try this stuff out with you, and then go on with Dave. Dave's an old friend. So anyway, also we do a weekly Wyckoff market discussion. Roman Bogomazov and I. He's a great white coffee and great educator. He and I taught together at Golden Gate University in San Francisco for many, many years. He taught the Wyckoff method. So anyway, you can go to ForexAnalytix, and if you want to attend, check it out. All right, let's get started. So NASDAQ 100, Dale, this is a chart. Now, my orientation is pretty long-term, I would say. I tend to try to find trends and follow them. One of the ways I do that is with point and figure charting. This is a vertical chart, obviously. And so you can see here that there were a couple of really beautiful reaccumulations in 2021. And so this one here in February, March really had a nice structure to it. And then also this one in May, June had a great structure. And so look at this. So I put the count in, but I'm going to show you this count in just a second. But I wanted to give you the context and then ultimately what happened, because we love it when this kind of stuff happens. So anyway, here we go. So this is, of all things, this is a point and figure chart, 30-minute intraday chart, 3-box reversal method, meaning that you have to have at least 3 entries in a column before you can move onward. Point and figure, I'm actually doing a workshop on point and figure for power charting right now. It's a 2-part series, and it sort of shows how to construct them. Anyway, here is the NASDAQ 100 3-box method, 20-point scaling. And this is that May to June period. And look at the count that we got. So here was what we call a first segment. And this did a really nice job of picking this up. But this count here went up to 16,420 at the high of the range, which is this whole area in blue right here. And this took us up to the 16,420. Well, look where we just hit, 16,454, which is a pretty darn good hit. It's about 1 box above the high box here on this count. And so we did this chart initially on June 21st, first day of summer, I guess. So anyway, now here, let's look at the triple Qs, which is just another way to look at the NASDAQ 100. And so this is that February to May period here, and here, this chart here is this period right there. But you can also see that this also confirms that same count. But look at the stair-stepping action in these horizontal point and figure charts. Classical Wyckoff technique. This count took us right up to this peak here, where it spent a significant amount of time, built a new cause. And our view in Wyckoff is you have to build a cause to get an effect. So you build a cause of accumulation to get the markup effect of higher prices. And so here, this cause here got us up to this 400 level, and then a smaller, what we call reaccumulation count right here. This area confirmed it, and we call this a stepping stone confirming count. And those are really sweet when we get them, because this is like a double confirmation of the ongoing trend. So this was a really good, very robust upward trend. And we got 3 conditions here at the highs. We got an overbought condition because we threw over the top of this trend channel. Yeah. So that's a climactic surge right there, Dale.
Right.
And we call that a throw over.
Right.
So that's a classic condition of a market that's just becoming overbought and overheated.
Do you wait for it to re-enter the channel for a signal?
That is a really that's a really good thing to do, is to wait for the channel. I've been known to take right on the counts and usually Wyckofians do things in tranches. So I might take a single tranche there and take another one as you come back in, take another one on the test, and so on. Okay, and so now here's the thing, Dale, is that the big question becomes, does this mean that we're done, this move is done? And I think it's more likely, and I have a reason I'll show you in a second, that I think what we could do is just hang out here for a little while and sort of see this index recollect itself for another move. And I'll show you why. And so here are the
How about
conditions.
3 to 5% correction from here? Is that viable?
Oh,
yeah. Then we go again?
Sure. It could look something like this, which is in the fall of last year, or this or this. And let me show you a bigger picture now. This is daily data. And this count here, early 2021, on the NDX counted up to 15,350, which didn't quite get up. Very close though. And notice how it threw over here and then turned right back in again. That happens a lot in point figure. Right. So then, in this chart I had said we may have to count this area right here. And so then an interesting thing happened, which was this is July right here. We built this new cause. So reaccumulation confirming count. And here we are back up to the high here. But look what we have. We have the two confirming counts on this larger scale.
All the way
and
up
they
there.
more or less match each other.
Yeah.
And so we may have to spend some time in here, but like you said, 3 to 5%, which is certainly manageable. And then off potentially we go to these higher objectives. So this I think is a very interesting place. I'm wondering if we don't have to get through the end of the year. And part of that is, there's going to be tax selling and, people taking profits.
Well, maybe tax. Yeah, there you go. The tax selling could be different this year. It's about people taking profits, not just harvesting losses because they're afraid of higher taxes next year, right?
Exactly. And they may have to raise cash to potentially pay some new type of tax, so that's very possible. So now I kind of want to get in a little bit into the inflation trend, and sort of the big question that I think is at work here is it transitory or is it ongoing? And so I'm going to have to sort of weave through this a little bit, because I think there might be sort of like two different cross currents at work here. But the CRB chart I put up on December 31st of 2020, and the CRBs was up like 43% in 2021 so far. But this count down here, the yellow shaded count, got us up to 212. And then I said, well, we may have to take this bigger count. And it's a very deep V bottom. And so it's a very wide count, but look at the objective. And unfortunately, let's see, I've got this little thing here that's kind of in my way. Okay. So 216 to 258. And here we are, October 26th. We hit 241.18, so definitely a hit. And so right into the middle of that upper range. And the interesting thing, there's a lot of energy in CRB also. So we have sort of hit the wall in the CRB for the moment. And so just zooming in now, and let's see, so zooming in, here's a daily vertical bar chart of the CRB, and look at this advance here from May to really the present yesterday. And you can see, look at here, we have the throw over, overbought, throw over, comes back in, and we fulfilled a point and figure count. And now we've made this sort of a
failing rally here. Is that
failing rally? It's pretty crappy looking to me, using a technical term. And
that's technical.
Yeah, very technical. And so I see this upward striding action here, which has a lot of Wyckofian characteristics. And so we always look for a buying climax and an automatic reaction to set the range. And we often, in a really bullish market, will get an uptrending reaccumulation. So it has all the elements in it. And I thought, well, this is good. Let's count this because it has these elements, and it gave us a count 230 to 249. And of course, we hit this 241.18. Could still hit 249, but we're in the range. It's a pretty big range because this is a pretty wide spreading structure. But
pull back to 230 likely. Is that what you're thinking here?
Yeah, I think that's a very, very likely that it could just be. Now, what we really need to see to confirm that we're in a corrective mode, which could be just a trading range, is we need to see one of these things, an automatic reaction, buying climax, automatic reaction. Now we have a range bound condition. We kind of don't have that yet. But I think that now, so near term CRB might be ready to pause. And I see some conviction coming out of Washington that maybe oil prices are too high. And that might very well be that we actually see some pushback on these upward trends for oil.
With the release from the Strategic Petroleum Reserve.
Exactly. Right? We
talked about that from a month ago. He probably does it next week, right in front of Thanksgiving holidays. So when people are driving, they go, "Oh, see what the president did.
Good call.
I'm still paying the same for my gas." That's
Good
what
call.
they'll discover.
Yeah. Well, so here's crude oil. Now, crude oil is a big part of the CRB, but you can see this upward trend. And this is a chart I did on January 13th of this year. And this count took us up to 85.12 to 112.48, and look where we got to 85. And so and then you can see what's happened since. So here's that 85 back down into the mid part of the channel. I think that oil might just be again in a trading range of sorts. We'll have to wait and see whether we get a new reaccumulation. But oil just works so well. I mean, I've been following crude oil with point figure analysis forever. And it's just one of the really great markets for point figure work. And look at this structure here, and look how it counted down to 760 to minus $3. So and it went right to 760.
What does it look like now?
Well, this, I think it's a little too early to count this. We have to wait and see whether we build some kind of a cause. I think that I would be looking for some kind of a cause for higher prices. Okay. And but I think we're just in the process of correcting right now.
But I mean, do we have any X's and O reversals from 85?
Well, we would on.
I mean, you're showing the target of where it could go to. I'm wondering what it looks like now.
Yeah. So if you go to if you go to a one box reversal chart, which I unfortunately don't have here, but that would show a reversal down from 85 down to 77. So that would be about a
we fulfilled it already.
6 box decline off of this peak.
77, I think, very close to it.
Yeah. So I do think that we could just build a big old count here. And I think it's too early to tell. Like you look at this, you can see, oh, there's a really nice cause here for a big decline. And it's exactly what we got. And this rally up to 65 set up a really cascading drop. And we were able to estimate the potential downward, which was substantial. So really what I want to get into a little bit is just this idea of, well, is inflation transitory? And I know that you all are really on top of sort of the short-term trends in these different commodities. And I thought, well, you know, I've been watching these from a really long-term perspective for a long time. And look at this cause built in copper. And there's, you know, there's a lot of concern. I have friends that are in the construction business, and they tell me how much copper prices have gone up. Well, this structure here, accumulation structure, if it is that, goes back to 07. I mean, it's huge. And so now look what's happened. We have in a white coffee in terms this what we call a sign of strength, because it's this area here has taken out all the prior peaks of resistance here, including this, very important. Highs. And it's gotten up to 480. This count of this turquoise area goes 530, and we've pulled back. Now this chart is through October 25th, but this is what we call a backup. And so often it'll do that after it jumps out. And if it gets real dull and narrow up here and doesn't show any capacity to turn back into the structure, that is bullish. And so we really, now me from the perspective of inflation, you know, long-term inflation, I would love to see copper just sort of get back to this resistance line around 420 and then just go, you know, maybe even go back into the trading range. Okay, but so nobody calls me and asks me what I want, you know, in the markets.
Yeah.
So
yeah, but you have you know, preferred narrative, so you're prepped. If it happens, you execute. Which numbers, Bruce, are you talking about long term? The 1480 to 1550, or you get both? A more powerful cause could take it to 2380 to 2450.
My experience is this, that what will happen with point and figure is these become stopping
Yes.
points in the
Okay.
ongoing uptrend. So
right.
you could go to this level. Heaven forbid we start to rally away from here. You could go to this level, which would be just a huge move, and then you could spend a point figure won't give you time. It'll just give you projections.
Right.
And so it could very well be that it could spend a year or two just hanging out in this area right here
Right.
before it builds a new cause that reconfirms the higher level. But
Yes.
you can imagine what this does to inflation to see copper go from being really in a stable, steady, non-volatile structure since '07 and before, and now all of a sudden it's in a trending mode.
Yeah, you're gonna have to hire security guards to guard your plumbing.
Yeah, exactly. Yeah.
So,
Well,
yeah.
like I said, I've got friends that are in the industry that just tell me amazing stories about how fast copper prices are going up. And so now, is copper the only character in this play? Well, look at natural gas. So natural gas, which is really a tricky business, it's tricky to trade this, but it has a kind of a family resemblance to copper in terms of it having. And I'm a pure technician. It's like
Yeah.
I just look at the charts and trade the charts. But here, look at this. This is just really classic. So we have this run up from support at 175, and it runs up to 6.25, which seems like a big old move, which it is. And then it goes into a range bound condition. And if now this chart here is through October 25th, but look at these segments. I've just basically identified these different segments that go out, and you can see here in a stair-stepping fashion, these segments go up as high as 37.25 from this level here. Now, my preference would be to see natural gas just consolidate here and maybe even come back in again for the sake of our economy and so on, and the world economy. But like I said, we have to really acknowledge the fact that this could be a very large accumulation structure. And if it starts to trend away from this area, see, every time it's gotten up here before, Dale, look, it just goes right back in. And so this is typical of a base or an accumulation. This time so far, not the case.
Yeah.
And so that is a classic characteristic of the completion of accumulation, is to see that. And so if it starts to scale away in an uptrending fashion from this will be what we call a change of character. And a change of character from this trading range into a trending structure now puts in play these different upward objectives. So this one here takes us 1150 to 1250. And so that's the way I trade them, is I just go, okay, how do you eat an elephant one bite at a time? And
so your first one,
yeah, let's focus on one at a time. Just be a trend follower.
All right.
Okay.
Good presentation.
Oh, thank you. So here's now, but wait, it gets worse. So here's nat gas back to 01.
Yeah.
And so what we just looked at is this area right here. And so let's just go even further. And so there's just and here, look at this big spike up into 05, 06. And we all remember what energy did back then. And that went up to that 1560 area, which this count in green is a reconfirmation of that. And so that would be a classic place for resistance. And we have a count that counts to that. So that's fascinating. So, and then, and of course, Dale, you just got to cut me off when you're run out of time.
We're getting close.
Yeah. So
I saw cotton too. Wow.
And so cotton is interesting. Yeah, cotton's interesting because it's up and out. So here's an example of what we talked about, where it got up to the resistance area, consolidated, did not come back in again, as it had done prior times back to 2012. And prior times, it just went right back down into the trading range. the accumulation. This time it didn't do that, and then it just came out of here really sharply. And now this is a recent reading here, 119.70, which is like right there.
So Bruce, I know you're a technician, but I also know that you probably think about things outside of the charts, and what you're showing here is something that is far from transitory. Maybe we should start using the word entrenched.
Yes.
With perhaps parabolic price increases across the board for commodities. And I know the Fed, if they wanted to, could have an impact on industrial type of commodities by tightening. But when you
No
talk
question.
about agricultural commodities,
I've actually been working on those.
Yeah, tightening doesn't take down the price of corn and beans and coffee and sugar and all of that. It could take down, copper and oil and economically sensitive commodities. So do you think the Fed is going to be forced to tighten next year because of what you're showing on the commodity side here?
My experience with the Fed is the Fed always is way behind the curve, sort of their MO. And
yeah, they are now, don't you think?
And I believe them to always be. And so now as they start to call it taper and cut back on QE, which we have to watch to see whether they pause doing that if the market convinces them to. But here's the conundrum that they're in now is, let's say that inflation and let's say it's 6%, so just overarching inflation is 6%, and interest rates are 1.5%, 1.75%, for the risk-free rate, so to speak. They have to get interest rates up to where the inflation rate is to really have an impact. And so think about what they would have to do to be able to get interest rates up to a level where it would effectively stop speculation, because a big part of what's going to happen in commodities is just speculation. Because if inflation is 6%, the CRB went up 41% in 2021 so far, and the Fed's at 1.75%, and they have to get to 6 just to get to just the overarching inflation rate, which a lot of people would argue is higher. People are going to just keep speculating. They're going to speculate in these assets that give them a real return over the rate of inflation, and the cost of money is nearly zero. So this is really the big, I think the big issue for the markets is, this is you just get paid to speculate right now.
Okay. A really nice looking work again, Bruce. You always bring in things that open my eyes and makes me think about targets and big picture stuff. I really enjoy your work. And
well, thank you, Dale.
Yeah, I appreciate you having a giving spirit and sharing it with our community. And just want to thank you. The best way for people to follow you, Bruce, is where?
They can follow my blogs, my videos, and I do a lot of this work there. And I also do some shorter term market work, and so and it's all free. So
your website, right?
Well, it's at stockcharts.com.
Oh, stockcharts.com. Okay, yeah.
Yeah, and so my blog is there, my videos are there, Stock Charts TV.
You're all in the fraternity now.
I'm all in. So, all right. but it's the most fun I have is coming here and talking to you guys. So
no kidding. We appreciate you, Bruce, and your work and your your experience level. You can't learn it, but you can learn from others that have it. So thank you very much, buddy, and have a great holiday season, and we'll do this again next year.
Wonderful, and have a great holiday to everyone.
All right, thank you very much, everyone.
Take care,
Bruce
everyone.
Fraser, and you could find him on Twitter at RD Wyckoff, and at his go to stockcharts.com, a great site. David does shows on there, and they have every top A-lister trader analyst on there at stockcharts.com. So that's a wrap for today, and I'll see everyone tomorrow. You could join the team in 13 minutes for the morning edge, and I sure wish I knew what Steve Volge was thinking and what Blake is doing right now. I wonder if Amanda's checked in. So good time to join, guys. And I'll talk to everyone tomorrow. Remember, don't just count your pips, count your blessings, and we'll see you. Good hunting today. And I'm signing off for the best team in technical analysis and trading on the net. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.